What is up, you guys? Nick here. Welcome to the channel if you're new. Thanks for coming back if you're not. Investors and analysts alike are still reeling from NIO Day, and the overwhelming sentiment on the markets is bullish. NIO just passed yet another massive milestone, which may have established them as a legitimate and actual competitor against Tesla. There are indeed many who were actually upset with NIO Day and the lack of transparency into fixed dates and timelines. But even though NIO was quite vague on the definitive rollout dates and implementation, it does not seem as investors are too worried about this. In today's episode, I want to talk about a few key facts I think a lot of investors are missing and why they may not actually be priced into the share price. I want to give an updated price prediction and discuss whether now marks a good buy point, a sell point to profit take, or a hold point. We have a lot to get to in today's video, but before we do, Webull has improved their promo. They are now offering 4 free stocks worth up to $3,700. All you have to do is 1, sign up, 2, open an account, and 3, deposit in at least $100 using the link in my description. This is a complete no-brainer. Webull offers some of the best analytics in the game and are a 0% commissions trading platform. This offer ends soon, guys. Don't sleep on it. I just started a Patreon page. I will be posting every single one of my trades moving throughout 2021. I finished 2020 with over a 50% ROI. If that interests you, the link is also in the description. And without further ado, ladies and gentlemen, let's get right into it. All right, so NIO intraday is absolutely on fire. They have just boarded the Apollo 69 and have a one-way ticket to the moon in hand and are currently exiting the stratosphere. How much fuel does this rocket have? Can they keep going? Well, let's discuss what investors and analysts are now pricing in. I think the overwhelming sentiment from NIO Day is very bullish, but I see most people focusing on one thing and one thing only, and that's their newest sedan, the ET7. Remember everyone, we knew this was going to be unveiled, and just like I've been saying for the past few months now, purchasing shares before this day was a very smart long-term hold, because this is exactly, and I mean exactly, what we saw from NIO Day 2019 when the EC6 was unveiled. Although investors knew the vehicles would be unveiled, they waited until the following trading period to actually purchase shares, but we as long-term investors here position ourselves before the surging share valuations, so we are thus exposed to the gains. Just like NIO Day 2019, this is exactly what has occurred NIO Day 2020. We saw that escalating share price into the day itself, and on the opening bell of the first trading period after, we see surging share prices. NIO is absolutely popping intraday, and it does indeed seem as that low 40 resistance line I was talking about was in fact a bottoming out, so congrats to everyone who purchased with me on that one. NIO is currently on its quest to $100 a share, and I do think we will see triple digits much sooner than many analysts may think. What I do not think analysts are fully pricing into NIO's share price is their upcoming Q4 earnings that will be called in February, their battery as a service model that can single-handedly outcompete other vehicle manufacturers, their advantage in terms of national subsidy programs, their brand equity, and their ongoing pursuits of becoming L4 full stack autonomous. Now let me explain why I am extremely confident NIO will reach $100 per share in the short term using a macro and overview approach of the market sentiments and the new age investor practices. I'll then link these thoughts back to NIO's fundamentals at the end of the video to formulate a price prediction, but hear me out, this is important. As many investors have been continuously moving towards Tesla as the leader in the EV space, what is becoming increasingly apparent is investors' interest in the electric vehicle space as a whole. There is no longer any doubt in anyone's mind that electric vehicles are the way of the future. In my opinion, they are superior to gas and diesel vehicles in literally every single way, but that's a video for a different day. With national subsidy programs rolling out worldwide at this point, carbon emission caps are being implemented by governments, there's decreasing battery costs, there's increasing mileage, there's increasing charging means, and lowering total vehicle costs. This is a race won by EVs. Tesla is nearing a $1 trillion market value and sitting in the mid to high 800s per share, showing the intense investor interest in the space. Now this is astronomically expensive, and considering they just underwent a 5-to-1 stock split, these shares would have actually been over $4,000 USD. Many analysts and investors are realizing the possibilities of what an EV share valuation could even be. And what's more, what a new age and generation of investor is actually willing to pay for a single share. Many lifelong older investors are completely and utterly baffled by the valuations at which investors continue to purchase shares. This is why Tesla has been the single largest shorted stock as of late. Short sellers are proved wrong every single time of what a Tesla share can amount to. I've heard probably 100 times now that Tesla has finally reached its capacity, yet again, these naysayers are proved wrong. Although Tesla is one of my favorite companies in the world, these shares, by the statistics and financials alone, are extremely overvalued. That's not being disputed. But what is disputed is old angry investors declaring that young investors should no longer be purchasing shares due to PE ratios, price to books, and price to sales, all of the stats alone. Everyone wants in on the action and truly aren't overly concerned with statistics of the company and are just purchasing shares because, well, other people are purchasing shares. This is the market sentiment currently ongoing in the investor world. Share volumes of EVs are amassing, and with a future so bright, it's extremely hard for investors to bet against the success of EVs. Now, narrowing in on specific EV companies, many have been honing in on Chinese emerging companies as their valuations are still incredibly low when compared to the already established giant Tesla. With knowledge of what a share price could feasibly amount to of a successful EV company, investors have been scrambling looking for the next big winner in the space, and this is increasingly appearing to be NIO. They're one of the contenders. If you have followed my channel for some time now, you will definitely be aware I am extremely bullish on NIO. I first bought shares at $3, first told my subscribers to purchase at $7, and wow, to see this company trading in the 60s is simply a thing of beauty. NIO just passed $100 billion in terms of market cap. This really is incredible, as just over 1 year ago, they were sitting at a market cap of only $4.28 billion. The amount of growth this company has received in 12 months is like none other, and I do think this will continue. As I was alluding to previously, I think a major driving factor on NIO's continued success is their battery as a service implementation and their battery swap technology. Now, this is something that sets NIO apart from almost every other EV manufacturer. There is an incredibly oversaturated EV market, and being different and unique is an absolute must, and NIO is doing this perfectly. Their battery swap stations, of which they hope to have 500 strategically located in mainland China by the end of 2021, is a revolutionary and, may I say, superior method than the conventional plug-and-charge method. Tesla toyed with this swap station tech early on in their lifespan, yet deemed it unfeasible, too expensive, and unrealistic. However, just look how far this has taken the company and how many doors it has opened. It not only allows for much quicker recharging times at around 3 to 5 minutes per charge, it not only allows for upgradable battery systems, it not only greatly increases brand equity, but it also largely keeps the resale value of vehicles intact. With a replaceable battery, these vehicles are essentially given heart transplants every single swap. There is no endured wear and tear on the vehicle. In case you are aware, Li Bin actually made his fortune through a vehicle distribution company. This is an industry he knows and has dominated. NIO users can now upgrade vehicles by the touch of a button on their app, swap in their vehicles, upgrade, downgrade, rent or buy. There is so much user flexibility, and along with battery as a service and the national subsidy programs, consumers can really purchase luxury electric vehicles for a fraction of the cost of what they would be otherwise. It's for these reasons that their delivery rates is exponentially increasing month over month, even whilst using an outsourcing model. With the valuations that Tesla is seeing, many are superimposing NIO on top of this and realizing what a successful EV company could be worth. Now, in my opinion, NIO and Tesla could not be any more different. They are completely opposite companies, managed differently and constructed entirely different. So superimposing one onto the other actually doesn't make any sense to me. However, if we as smart, long-term investors know one thing, is that the market doesn't always care about rational thought. It cares about momentum, industry, and future potential. Whether the company is utilizing an outsourcing model or is vertically integrated, has a swappable system or a plug-and-charge system, is based in the luxury industry or the affordability sector, has government affiliation or not, the market doesn't care. It's seeing intense investor interest in the industry wide. I do think many investors are beginning to profit take on their high Tesla valuations and reallocating this capital into other emerging EV companies such as NIO. I do think NIO will hit their Q4 out of the ballpark this year. It's for this reason I would not be surprised to see NIO hovering around the $60 mark for the next week or two and climb its way up to $70 for Q4 earnings slated in February. If they yet again are able to hit January deliveries out of the park with hopefully a 20% or more month-over-month gain, I think paired with the Q4 anticipation, we could feasibly see shares in the $80 valuations, and then moving into Q1 earnings and more transparency on a European rollout, I do think we will see share prices in triple digits. A lot of investors have been entirely caught up in the NIO Day event and are forgetting that the company still rolls on, is still primarily focused on increasing vehicle and gross margins, increasing deliveries, and readying their company for the eventual sedan and European rollout. When I invest in a company, I am looking 3, 5, 10 years down the line and try to zoom out on the short-term noise. It's for these long-term prospects that I am continuously purchasing NIO shares on dip days. My current ideal entry point is below $60 a share, as I do think this will eventually be a 100% YTD gain, and I am a long-term NIO investor. NIO to the moon. Anyways, everyone, let me know, are you buying, selling, holding? And if so, at what share price? Don't forget about the Webull promo, 4 free stocks worth up to $3,700. Check out my Patreon page if you haven't already. I'll be posting more content there, behind the scenes and quicker NIO updates. Anyways, everyone, I will see you guys all in the next video. Take care, happy trading, cheers.